G'day folks, Berkshire Hathaway has one major problem, and it is that they are too big. I'm going to explain what I mean by this. Is the mogul that is Warren Buffett just recently sold off some world-renowned dividend stocks. We're talking Johnson & Johnson, Procter & Gamble, hell, even General Motors, which was probably a good decision. Been saying that for a while, as they even just recently canceled their self-driving software, the Cruise program. We're going to talk about the news, the earnings surrounding these companies, why it's likely he's selling them, stocks that he's buying, and the potential of what he's going to be doing with this record over $150 billion in cash that he is holding. And that is a conversation you'd appreciate, damn it. As always, hit that like button because, God, this is just fascinating, man. This dude, if you zoomed out on the long scale of Berkshire Hathaway's performance, has by leaps and bounds outperformed the S&P 500. But in recent years, probably the last 5-10 years, they're struggling desperately to keep up with the performance because of the explosion in tech, along with the fact that they are starting to over-diversify the portfolio. I believe at the scale they currently sit, this multi-$100 billion conglomerate has just been buying too much, and they realize that the only way they can outperform is by concentrating a bit more. And we can see over year to date that there's only been about one time over the last year they were outperforming the S&P, and this is kind of hard to grasp because this is just capital gain performance. You do have to keep in mind the S&P pays over 1.5% dividend, which you will have to tap onto this performance. If you zoom out over the 5-year, it's very stark at when Berkshire has actually been outperforming. Now, Warren Buffett and his partner in crime, Charlie Munger, have been quoted saying that if all hell breaks loose, our portfolio will be the last one standing. But I don't know if I want to take the risk of giving my personal dollars to a managed fund that has continued to underperform the broader indices and has become more of a trading platform than their original quoted design being that if we find something we like, we want to own it forever and preferably own more of it over time. And taking a look at their portfolio itself here, because again, if I'm taking on risk, I expect excelled performance here. And as they continue to be a net seller of stocks, which again continues to blow my mind in this more suppressed market environment, why aren't you taking advantage, just like through the 2022 crash, that big tech blow off where you could have been picking up some really good deals and good companies? You just continue to sell, right? I mean, you take a look at Apple now becoming a balloon position, but keep in mind this only represents the publicly traded companies, and this isn't a good representation of the overall portfolio with the private ones. But these big scaled companies continue to become bigger because they're net sellers, which I think comes back to the idea of concentrating. But take a look, because Apple, Bank of America, American Express, and Coca-Cola have been unchanged in the overall portfolio. Whereas on the lower end of things, where we're talking about the oil industry, they did take a reasonable chunk by selling 10% of Chevron. They did slightly increase Occidental Petroleum, but where things get really impressive is we scroll down to take a look at the total trades for the quarter. I do want to point out they've been selling Amazon, which kind of blows my mind because I do feel like Amazon's coming into a really good growth phase and has actually been a really big outlier against this kind of recessionary backdrop. But all the way down here is where things kind of get mind-blowing, selling UPS, Procter & Gamble, Mandalay, Johnson & Johnson, General Motors, just to name a few of the major impacting ones. And General Motors, why did you hold that for so long? It has been bankrupted so many times with government bailouts. There's been no stock growth at all, and you've held this one for so damn long. Why now, of all times, did you think it was appropriate to sell General Motors? I'd love to hear some of these decision makings. Is right now, most of their biggest investments have been overseas. They have not even been in North America with these Japanese companies that are commodity traders, as Japan has to import most of its commodities. And ever since he took stakes in these companies back in 2020, they have absolutely excelled, buying, I think, about 5 of them, these commodity traders. And look at this. Since Warren Buffett took a stake, these things have absolutely freaking exploded, more so than they've ever seen in their entire history. And this is great and all, and I love seeing it. The problem is they weren't materially large enough positions to make a big impact on the portfolio, which again comes to the problem of scale. When you own too many positions, the great ones kind of just lose the performance by the ones that aren't doing as well, right? Which is why I think they're starting to scale down some of the smaller, lackluster performers. But taking a look at some of those, for example, that I still think are good opportunities, Johnson & Johnson trading at a price to earnings of only 11 with a 3% dividend yield as it stands today. Yeah, it hasn't done much over 5 years, but for a stabilizer that continues to see revenue growth, I'm shocked that they completely liquidated this position because the earnings all in all look pretty good here, going to $21 billion for the last quarter from $19.9 billion. Gross profit continues to increase. The only thing I don't like is the amount of liabilities they're sitting on, about $94 billion versus the $166 billion in assets. But I'm not like overly concerned by that. It's Johnson & Johnson, for crying out loud. I don't think they're going anywhere anytime soon. But nonetheless, Procter & Gamble, this one I kind of get the idea of because, Procter & Gamble has continually been raising prices. And though they sell toilet paper and necessity items, there are some kind of out of the blue, random random generic, competitors coming to play that can sell it at a much more suppressed price. And as people get concerned about their spending, they might prefer the generic over the name brands. But Procter & Gamble, I still don't think is going anywhere, and they're continuing to see great, they're seeing net sales go up. I mean, I don't think there's anything wrong with the underlying business either. When it comes to General Motors, however, look at this one. This one I've had a quarrel with for a long time. I mean, this company has done nothing for a decade. I mean, absolutely abysmal returns. Look at the price to earnings multiple. People are wondering why Tesla can trade at the multiples it does and General Motors trades at a PE of 4. And that's because people presume in the future General Motors isn't going to be around. And honestly, there's no surprise that people believe that with the amount of bankruptcies they've gone through. And I know it's usually a controversial argument and it's so easy to just switch to EVs, yet General Motors has been 100% unprofitable with their EV lineup incomparable to Tesla, and now even announcing, that they're basically going to be getting a halt on the Cruise, which is their self-driving software. And I'm curious as to why. Issues, obviously, and this is not only from the people driving it, like this is including people sitting behind the wheel. So clearly they're having a lot of issues with many different fronts. And again, all of this was started, by Tesla kind of forcing this shift. And it's going to be curious and interesting to see what the long term happens with many of these major auto companies and which ones actually survive this EV transition. But luckily, like the revenue here is actually still growing. It was up 5.4%. Net income, has actually been going down. It's down 7.3%. This is just one of those old dinosaur companies that, I don't know why Buffett held it for so long. Realistically, Tesla's a speculation of the future, and GM is kind of a dinosaur that's fighting to stay alive. And I don't know why somebody like Buffett would even want to hold either of them up to this point. I don't know how Berkshire scales from here if they continue to over diversify or look at too many other investments. And that's what I think they're doing by stacking a huge amount of capital and, just continuing to keep the breadwinners. But I can't foresee why they're not picking up some of these good buying opportunities. A lot of opportunities still out there, but I'll pass the question off to you. I'd love to know what you think about this in that comment section below.